Good morning, everyone, and welcome to the European crossover. Okay, great. Just making sure I had my audio. So once again, good morning, everyone, and welcome to the European crossover webinar. And we're seeing the dollar still continue to come under some pressure. We're seeing the euro work a little bit higher here. And just right across the board, we'll take a quick overview here. As you can see, the euro stronger here, but let's go on and move in here. It's a little bit closer on the 2-hour chart. We're going to catch over a little bit of news and then get straight on into the technicals. Trying to push up a little bit higher here, and we do have some resistance coming in here at 1383 coming in right here, but we are pushing a little bit higher. We're going to cover some economic news that's actually hit the wires just a couple minutes ago, or right at the top of the hour, which was the German IFO numbers. But as usual, we'll take just a quick overview here. Now we are seeing the dollar is continue to go on, as I mentioned, inversely with the euro, continue to go on and work back here. We're actually at this 96.93. We had talked about support level coming in here down to about 96.98. We're just below that here. A little bit of a ridge right here coming in around 89. Pretty low pullback on the dollar. Dollar has a little concerns, even though we're moving into FOMC. There are thoughts that maybe the committee may even have to, really pare back the assessment. I don't think they don't want to hike, even though there's a lot of a case being made for that. And I think probably that uncertainty is what's weighing here on the dollar. Most do expect a dovish hike, and some are thinking we may even get more so than that to a certain extent. Let's go in and take a look here with cable. If you look here on cable, we've come up just the top of this little zone that we've been working into. So we pushed the parameters really across the board, and here you're going to be coming up here to 26.64. Once again, like I said, we'll just do a quick overview of where things are at. Cover just a touch bit of news and economic data that's coming out for the morning. And for that, we're going to move right on into the analysis. Going on to the dollar yen, we saw a pretty good pullback here in the dollar yen. We had our support here at 1291 here on the buys chart. And we did go on and find support here, come right here at 1291. But once again, we see. There we go. Once again, as the rest of the day started to play out, and also here you're seeing with the yen strengthening, with all those concerns with the risk, we certainly saw the yen going in, strengthen. Obviously, inversely, the dollar yen going in pair back as the dollar in it, just even outside of the situation with equities, instead of more of a rush to dollar, you've seen greater moves into safe havens as we've really come through some tough times here with the S&Ps. Speaking of which, pull it down. So a pretty good move, and I posted a chart with pretty good support level at 25.53. We'll go on and take a look here. This is on the daily. And I posted this chart for some support here. I'll pull this further back. Let's move this into a daily. There we go. Pretty good support in here. And obviously, like I said, we got a little bit of an overshoot past that 25.53, but you can see that holding up. Actually, currently right now 25.56. So we did see a rebound up here to 25.65, which took out those. We had a rebound high, I think, to about in the afternoon to about 25.63. So we rallied about 10 handles. Then to off of that 25.53, came down here, really tested the lows, and then came back before the afternoon, at the end of the afternoon, to come finish up basically right at 25.53. and we're just holding steady here at this point. But we've seen quite a bit of pressure. Hence, as I mentioned, the pullback that we've seen here in the dollar yen. Actually, have this on the daily. We'll switch back into the 2-hour. And moving on to the Asian currencies. We did see a bit of a pop-up here in the Australian dollar. The RBA also announced that their next move would be would be more likely to be up than down. That may not be saying a whole lot, but for a market that's starved for any kind of a good news, we certainly saw a pop up here past 72. Then we started going and pare back a bit here on the Aussie dollar. Another big mover was also the crude oil market. And boy, did we see this market really come down, even take out, and at this point now, we've even taken out $48. I mean, an amazing move, to say the least. And once that pressure, the concerns about global growth continue to go away, it has really exacerbated the move here in crude oil. Once again, we'll take a little bit further look on that, because certainly that has its own impact on the Canadian dollar. There we go. And you see this just still pushing up higher here, 34.13. Honestly, I'm surprised that we haven't even blown doors on this, because one of the things that we're looking at yesterday also, you can see here, we're just above that level here on the daily. I'm surprised it hasn't even, popped even higher. Certainly, it's going to be tough for it to get beyond that. Even with the dollar weakening, the moves that we've seen here in the crude oil is certainly going to go in and take its toll on the Canadian dollar. And look at that. That's just been a huge move down here. And been absolutely relentless. And also with the gold market, once again, like with the dollar pulling out, we're looking for resistance coming into this 1242, probably pare back a bit into the FOMC. But once again, the story's kind of flipped now there, because now they're probably garnering a lot more strength with the story or expectations that the U.S. could slide into a recession. And basically right now, not only is the dollar paring back, but gold's chomping at the bit that we can see things really start to dial down as far as interest rate outlook, and that's really opening up the doors here on this gold market. December gold right now, take a look on that. Currently 1252.20. 1252.20, so you're trading about a $4 premium. The February futures is to the XAU. So let's go move into the news right now. We just had the German iPhone numbers that came out, and actually they were looking for 101.80, came in at 101. So a little bit of a surprise to the downside, and maybe not so much a surprise, because one of the concerns we had is with these German economic numbers. So once again, the iPhone came in at 101. They were expecting 101.80, so the surprise on the downside of 0.80. Also, new conditions, a little bit of slight down tick in there, and for expectations, pretty good pull down there too. They're looking for 98.3, got 97.3. We do have coming up later today. We do have global dairy auctions. Certainly, that's going to go on and have its own impact on the kiwi. And we also have building permits and housing starts in the U.S. That's going to be at 8:30 Eastern. And Canadian manufacturing sales also at 8:30 Eastern. So we want to go on and watch those closely. Obviously, later today we'll have API oil stocks. But right now, like I said, the momentum and the strength of the move is just so strong here in the crude oil market that God, it's hard to turn that tide back. And as I mentioned before, I'm surprised that the Canadian dollar has even been this well contained. Certainly, it's having its own impact here. You know, from the cash dollar, if you look at it, boy, what a difference here. You look here on the dollar index here, and then look at the Canadian dollar. It's still hugging right here at the highs up here. I'm surprised, like I said, we haven't even ripped it even higher. If the dollar had been up a little bit higher, this thing probably be well on its way to 135. If, as I said, the dollar was still, you know, close to, let's say, 97 and a quarter-ish or so. Let's go on and move into the news quickly, just to recap, and then we'll start right on the analysis. And as I said, now with the new time, we'll be able to start to focus on markets. A little bit of a work in progress, but we'll get there, and we'll start to look at other markets, including other cross rates, or not other cross rates, but just cross rates. So as the Canadian dollar slips, as the oil price drops, and rate hike bets fade, and that's going to be the key story. Even though we knew the FOMC is going to be the key story, but as far as the moves, the Canadian dollar weakened against the greenback on Monday, underperformed most of the G10 currencies as oil prices fell, and market players look for a widening gap between the U.S. and Canadian interest rates over the coming year. The Federal Reserve is widely expected to raise rates on Wednesday, despite President Trump and his top aide of ratcheting up the criticism of the central bank's monetary policy tightening. It's more of a rate story right now, said Scott Lampert, head of global markets, HSBC Bank Canada. The expectation is the Bank of Canada is probably going to be a little less hawkish than the Fed. Investors have slashed bets on additional tightening for the Bank of Canada following a dovish interest rate announcement from the central bank earlier this month. The Bank of Canada has hiked its benchmark rate 5 times since July 2017 to leave it at 1.75%. Money markets just expect 25 basis points of further tightening next year, which would leave the policy rate falling short of the central bank's neutral rate estimated between 2 and 3.5%. The Canadian dollar was trading at 0.2% lower at 34.10. Obviously, like I said, we're just a touch bit higher. Losses for the luna came as worries about slower growth demand, pressured stocks, and the price of oil, one of Canada's major exports. We certainly did. We're going to review that. And also, home sales fell 2.3% in November from October. On to the Australian and New Zealand dollars. Get a reprieve as the dollar faces troubles of its own. The Australian and New Zealand dollars sailed into choppy seas on Tuesday as sellers swamped Asian equity markets, but their U.S. counterpart faced uncertainty over its own interest rates. The U.S. currency is undermined by speculation that the Federal Reserve will use a policy meeting on Wednesday to signal that further rate hikes will be conditional on economic fortunes. There's also a chance President Trump could force a partial shutdown of the U.S. government on Friday if Congress does not approve funding for his proposed U.S.-Mexico border wall. We believe the risk is the U.S. dollar ends the week lower if the short-term funding bill is not approved and if the Fed changes its forward guidance from expecting further global gradual increases to describing the Fed funds rate as close to neutral. At home, the Reserve Bank of Australia reiterated that the next move in rates was likely to be upward, but there was a strong case for a move anytime soon given downside risk to consumption and the housing markets. But like I said, for a market that's starved for good news, certainly we saw the The Aussie rally, almost 50 pips. We've given up, portion of that, but certainly, like I said, seeing something like that, the market was ready to go on and chomp at the bit and move higher. The sentiment in these minutes is somewhat less confident about the economy, said Westpac chief economist Bill Evans. Taking into account the attention given to the credit, housing market, and external risk, these minutes should be interpreted more dovishly. The debt market seemed to agree with the 3-year bond futures with upticks to 98.10. Over in New Zealand, the Kiwi was firm at 68.45, buoyed in part by improved business confidence, and ANZ Bank survey showed firms turned less pessimistic on the economy in December while becoming more upbeat on their own prospects. The next major risk for the Kiwi was an auction for dairy, New Zealand's main goods export. Futures markets suggest the price for whole milk powder, the most widely traded product, would increase 3%, though global supply has been outpacing demand in recent months. And let's go and move on to the dollar. The dollar was fragile in Asian trade on Tuesday as markets speculated growth worries will prompt the Fed to signal a pause in this monetary tightening cycle in the week's meeting. Asian equities were hit hard after a rout on Wall Street. Overnight found a drum whirl of weak data globally, reinforcing the Fed's widely expected rate hike on Wednesday would usher in a slowdown. We're expecting a dovish hike by the Fed. The data has not been tepid enough for the central bank to not yet to hike in December, said Rodrigo Cottrell. Senior Fed officials, Fed Chair Jerome Powell, have recently become more cautious about the policy outlook that underlined a shift in market sentiment from a few months ago. While the U.S. Central Bank's latest decision on plot projections from September indicate its willingness to raise 3 times in 2019, the interest rate futures market is priced in only one more hike in 2019. This mismatch reflects a belief that the U.S. borrowing costs will hurt U.S. growth and ultimately force the Fed to hit the pause button on its monetary tightenings. The U.S. economy has been growing strong this year and has started to show signs of fatigue, adding to the growing evidence elsewhere, including in Europe and China, of cooling momentum. Most investors expect the central bank to be less hawkish, so if the Fed makes it clear that the further rate hikes are needed, there's still scope for 3 more rounds of tightening, and the dollar will soar regardless of Powell's concerns about the economy. In a tweet overnight, President Trump took another swipe at the Fed's expected increase this week, saying it was incredible for the central bank to even consider tightening given the global economic and political uncertainties. Well, I mean, come on. He's a large part of those issues because the whole thing with China has really had a big impact. The Japanese yen and Swiss franc are likely to take on the mantle of safe havens from the greenback for the time being, Cottrell said. Yen traders are also focused on the Bank of Japan's meeting on the 19th and 20th of December, which is widely expected to keep ultra loose as inflation remains well below its target. The euro is up marginally at 13.50, but we've seen it move higher. Having recovered all of its losses from Monday. Let's go back here. And as far as the ANZ Bank survey showed that firms turned a lot less pessimistic on the economy in December while becoming more upbeat on their own prospects. The Kiwi had fallen sharply on Friday after the RBNZ said it was considering almost doubling the required capital banks would need to hold in order to better safeguard financial system resilience. With that, let's go on and move into the bias chart. I'm seeing here a little bit of a gravestone doji here and the euro. So let's get this started. So we certainly did go and move past this 13.35 here in the euro as the dollar's weakened, but this is a pretty key area here for the dollar itself. Let's go and move this here. Right down in here, you see that here at 96.92. I wouldn't even, I thought yesterday we'd probably come in between this 20, below 20, down here to maybe as low as 98. But they've pushed it a pretty good chunk right here, but there's some good support coming here. So once again, coincides about the same time where you start to see the euro pair back from this run up here to the 1376. So let's get a closer look here with the euro. Now, we saw a pretty good rip here on Mondays, and sometimes I know Amanda likes to say, watch out for you can't trust these Monday moves. And I think the market really got, knocked pretty good for a good loop back on Friday. Really overdone at the time. We were looking for support. Remember the time, I think it was 1286, and we had just gone just a hair bit below that, I believe it was, and then obviously we saw a rebound before the end of the day come back up, and that kind of saved the day, and we certainly saw the market push further, primarily just on weakness in the dollar. Obviously, the euro comprises 56% of the cash dollar index, so they basically trade inverse to one another. As we're looking into the resistance for the day, this is some good volume resistance coming in right there, right here. Pretty good volume resistance. That's going to be 1382. Right in here. Pretty good volume resistance there. Good resistance level, so we'll go with 1382. Still going to remain bearish. And let's take a look on the daily if we see anything there. Right here coming across 1397. So it'd be important if they were to be able to get past, it's actually even here, higher right there. It's actually going to be 114. Seems like a logical one, but be huge on a daily if we could get past 114. So let's go and mark that up. This was so important, and with this level we came up with on Friday, when we're looking for support or where the market to try and hold at least temporarily at the time, and that was our 1286. And when we came up with that was with the daily. Obviously, we saw in the market make a pretty decent recovery before the close on Friday, as bad as things looked at the time with the PMIs. Obviously, this whole story with the dollar and the Fed is a fluid story in the sense that the further knockdown that we see in equities is really taking its toll here, and I don't want to say revising, but almost on an intraday basis, revising what the outlook is that the Fed could actually do. And certainly that's having its own impact where we were looking for we'll probably see the dollar continue to strengthen into the FOMC, and then we could see a pretty good rebound here as the Fed tries to back off. The pressure that we're seeing here in equities is really taking its toll. Henceforth, we've seen the dollar yen come off quite a bit here also. Look at this. So once again, like I said, a fluid story, no doubt. Let's go on and move back here into the 2-hour chart. Support comes in right where we're looking for resistance yesterday, which is a 1336 right in this area. That's going to be support on a very short-term basis. There's our 1286 from Friday, which the market ended up defending that decently. Going to move into the cable now. Well, we've been so oversold here. Certainly the momentum is still pushing lower or keeping the downside, but we are a bit overdone here. And the same thing when we saw the prior week when we saw a pretty good little rebound, but then we talked about, oh, we can see a rally back up to 26.94 and still wouldn't change anything. And we saw that rally take us almost right to 26.94. It took us to 26.86. And we saw same thing here, except that the resistance comes in and we had this in place here, this 26.64. And we actually, so far, the high for today's been 26.61 and a half. So there's our resistance right here, 26.64. And one of the reasons I like to use the exponential moving averages, and what I use, Stephen had asked me yesterday is, and I told you I focus this, I mean, I've focused, but I've gone this because some of these moves, case in point, like with the euro, they're so quick to, ultimately change. Obviously, we're seeing here covering the cable, but I like to use the exponential moving average on the 30. I'll use it on 5 just to see when I see a quick turnaround. But you can see here that it's been on a pretty good move here. Let's go and switch this to the cable. Oh, that's what we're doing the work on. But you can see here how it's maintained. Once we flip to this buy, and it's kept that momentum. One thing I like about this is because these two seem to complement each other very, very well. As far as the move. And the key thing is that when you start to see a dip, does it cross back below it? And what I'm saying is that these two seem to work in concert very well. The signals, nothing's ever perfect, but I'm saying it keeps things, from my type of trading, keeps things in perspective. So instead of easily getting faked out, you can see here that the market continued to remain a little bit, higher here. I'll use the 5-minute, but once again, you can see here on this exponential moving average here. And I think that helps, especially in a market with the cable here, such a fast moving market. Same thing here with the 5 minutes. So let's see how this translates out. But let's go and take a look as far as our support. Support now on the cable. For today is going to come in right there, 2608. 26. Actually, it's 2609. 2609. Well, the Aussies had quite the fall here, and we have some pretty good support. I was speaking to Dee in the Asian session last evening, and we were talking about this. So, well, it's a little bit too late to be shorting this market, but if we already go and see a dip here, the support's going to come in right here if they want to test the 71.42. Well, the RBA came out with the one thing that the market was focusing on was as whole, which sounds kind of funny when you think about it, but a market that's once again starved for good news. They're saying, well, the next move is likely to be up. And that really got the market to jump up quite a bit at the time. We're looking at it here on the 2-hour chart, but you saw a quick move up here, basically 50 pips. We kind of backed down again. Now as the dollar had weakened, we've made a push up in here. We're starting to pare back just a bit, not a whole lot, but we saw that quick move up in here of nearly 50 pips. So looking back here, we know we're under a lot of pressure, especially with the way equities have held up. Short-term basis, Support's going to be right coming in here on a short-term basis. So any dips back here, the market's probably going to try and defend those. We'll go with 71.70. This market, once again, we saw a move, but it wasn't a huge move. We're still open to come down here and test this market. On a very short-term basis, it's going to be right here, 71.64. Any dips would allow them to take the little stops out, and the market may try and step in and figure we're very oversold, use this opportunity to catch some stops to come in just below that, and I would think come in right around the 71.63. The market's still open to testing lower. Certainly things, they've really put the Aussie on the defensive, and if you're trying to stretch this for what it's worth, it's going to be 71.41. But on a short-term basis for today, right here, 71.64. I'm not so sure we can make this move up in here, but resistance will come in right there at 72.16. Dollar's already had a pretty good knock-in, so but the resistance will be 72.16. And let's go move into the Kiwi. We do have dairy auctions today, and we've had a nice move in the Kiwi, and it's actually maintained its gains a lot better than the Aussie has. So as we come into those dairy auctions, and they're expecting them to be positive, actually. So we have the opportunity to push a little bit higher. We'll actually give it a little bit of room in case we hit some stops and try and push this market. Resistance right now at this point is going to be 68.95 coming in right here, 68.95 for today. It already had a pretty good down move here. I'll look right in here, coming across here for this market to try and defend this area here on a pullback of 68.35 right there. Well, moving into the Canadian dollar, I'm surprised that we're not higher. The only thing that's keeping it from bust out even further has been the weakness that we've seen in the dollar, because this thing really looks like it's trying to move higher. Obviously, the weakness that we've seen in the oil market, we actually just went below, went and got a $47 handle on this just at the beginning of the show. So we've really pushed this for all it's worth as far as the crude oil. And I'm surprised we haven't even jumped up even further here. But you've got this zone in between, but we've been able to hold it here. We'll see what happens once we get past FOMC, but certainly the weakness, obviously with the concern with global growth, have really pushed oil and kept the pressure on the Canadian dollar. Obviously, the Bank of Canada, certainly with their outlook, has actually also continued to go away on the Canadian dollar. So I'm surprised it's not even higher. The market, here's my concern, is that we're still holding here as we move in closer to the FOMC. We could go in and see some stops hit here, and then ultimately may see this thing end up paring back or not, retaining these highs. But resistance now is certainly open to the upside at this point. Resistance at this point, if we're looking here, is going to come in. It's going to be 34.50. Support on a very short-term basis is going to come in right here at 33.71. Well, if you look here on the dollar Swissy, you can see this engulfing, bearish engulfing line right here on the daily. Certainly, we've kept the downside pressure here. So let's go and take a look here where we stand. And on the 2-hour chart, we had mentioned this before. If you saw it, look at the and same thing. Why I like the 2-hour chart, because you get a quicker reaction. You actually had this gravestone doji, and I wouldn't quite say this would have been a hanging man because the wick was. I mean, the body was too low, but certainly opening the door for us to go on and move lower here on the dollar Swiss. But this, as I mentioned, this market's kind of marched to its own drummer. On a very short-term basis, support's going to come in right there, which is 99 even, which is pressed just like 98.97, so not that far away. Resistance, well, that's pretty clear right there, coming across. 99.44. And move into the dollar yen. One of the concerns here towards the end of the week and at the start of the beginning was the JGBs continue to go, lower and lower as far as the interest rates, and but obviously the greater concern, as we've talked about once again, is when you look at here, the relentless damage has been done here in the equities market, and certainly that has driven that safe haven bid to the yen. And seeing this dollar yen inversely going and pull back. When we're looking here there is a bit of support here at this. Actually, it would even move even a little bit lower right there. Oh. I don't know why that thing comes on. Let me move this off. I'll have to take a look at that. something tried to take control. It's the same thing that happened last time, but I don't want to take any time looking at that right now. But when we look in here, we've got some support coming in. It's 1186. There we go. So that's going to be pretty key on the downside for the daily, 1186. So we'll mark this off. As far as resistance, it's a ways down, and although we could see a change here in the complexion here in the equities, but if we were to get a pair back on a very short-term basis, it's going to be 1276 coming across, 1276 on the resistance. And we would need to go up that day into a range. Hasn't turned, can't say it's bearish overall, although certainly on a short-term basis, it has flipped things lower. But we'll have to spend a little bit more time. Once we get past the FOMC, we'll have a better gauge. But most of it, like I said, that's everybody's putting in their votes in, and things have really changed quite a bit to where I guess the movement you're seeing in equities, everybody believes is suggesting a recession around the corner. It may be a bit extreme, but that's where the market is seeing things play out. Let's go on and move into the cash dollar index now. Well, from the day before, we've had this bearish dark cloud cover, and certainly we've continued to go on and push lower into this daily support, which is going to be key here, would be this 96.72 coming across. There we go. And you can see on the 2R right here at 80. Coming in right there, 96.80. Resistance coming in right there, 97.17. And for now, still retaining its bullish bent. We staged a pretty nice recovery here in the gold market, XAU, and we're even able to get just right here, nick this top here at the 1245. Now, it looked like the market would want to retain its pressure as we moved into FOMC. We were really having a tough time to get beyond this 1250 and slid back and really opened the door for them to gauge and test some stops. Yes, we went lower, but once again, the weakness that we're seeing, the dollar has really, as I said, flipped this with the weakness in, more importantly, the equities, where the thought is the Fed's really going to have to go on pause mode. And that certainly has opened up the move for the gold to move higher. One of the things that we had referenced over the last couple of weeks, and we hadn't seen it yet come into fruition, and we may see that now more so. And I think you have to keep that in the back of your minds. Is a shift where some people may feel comfortable now because of this volatility to put some money into gold. Now, we referenced this about a week and a half ago. We saw a little bit of a follow through on gold, but not really a whole lot. We said there'd probably be an undertone bid as people start to shift some assets into gold. Well, I think you're going to start to see that maybe play in a little bit further as the market continues to move lower. Now, when I say that, I'm talking about from a retail, I'm talking about the greater public. Mutual fund investors may say, I'll park a little bit of money in gold. Not a lot, but I'll put in 2% of my money in gold. That's going to provide a nice undertone bid for the market. And so with that being said, obviously you've seen this big fall. Like I said, I like this 25.53. I posted a chart yesterday in the chart room, also posted on Twitter. We got below, but we actually closed at 25.53 on the nose. By the end of the afternoon, you can see here we are almost 10 handles higher. But once again, like I said, this type of volatility really shakes the confidence of folks. I think we're a little bit overdone here. When I posted that chart 25.53, I thought, hey, now we can start to. And I was just coming off right across, like I said, me and my touches. This is where I was coming and finding the support right there. And I had mentioned that's a pretty good, nice bounceable bottom. They tested it. They tested it pretty hard, but you can see we're almost 10 handles off of that support to 25.53. But I think, as I said, this is going to provide a nice undertone for gold where people say, I'm going to move a little bit of assets, a little bit. Well, if the whole idea that the Fed's going to start to ease back, that's really going to open the door and unleash the kraken here in gold. I think it could really start to move higher. And I think the gold has the opportunity on the XAU to move up here to 1290. And going to do it any time right now, but in the very near future, I think it is possible, especially if the Fed gets the collar or the cuffs put on them, which I think it can. We just don't even think about getting in the way of this gold. I think we can really move higher. So where are we now? You can see here, we're still pushing higher here. May not be able to see this until tomorrow. We start to push in here, but you can see right here, 1258. I would not get in the way of this thing. Let's go on and take a look at something here. I'm looking at 1253, but I'm moving this to the 4 hour just so we can see it a little clearer. And boy, some good. Right there, a lot of good volume right there. It's actually 1255. So we don't want to get in the way of this thing, so we can actually give it some room. It's going to be 1255. And this really starts to move into tomorrow. It may stay quiet until then and just keep trying to push higher. Right now, Feb gold is at 1253 and 1253.60. Let's go on and as far as support. Right there, 1246. Short-term support. How quickly this market wanted to turn around. And there was some pressure initially, but this whole story with the potential for recession and so forth and the Fed being collared really caught the market. You can see here how things turned around here, why I like to use the exponential moving average. Just look how this has held it right here, and we can even look at it on a very shorter term basis on the 5-minute exponential moving average. Especially if you're starting to see a setup, you're able to react a little bit faster here. Let's go move into the 30-year bond. Well, here we are back to moving to these highs again in light of everything that's going on. So let's this is the one market that I like to always look at this on a 4-hour chart. Yeah, 4405. I'll tell you what, that's music to the gold bug's ears with these bonds moving higher. Short-term resistance is right there. That might even be too tight. It's going to be right there, 4307. There's resistance right there. 63.71 in the buns. Come across. Obviously, things have turned around, and we got those weak German iPhone numbers. Also, they were surprised to the downside. So support is going to come in here, 63.22. I like to call it actually 63.23 on the buns. We're starting to see a bit of a rebound here in equities here in the DAX. Support for right now is going to be 10.764. Here's resistance right there, 10.858. 10.858. See if we see something more definitive on the 2-hour chart. The real resistance doesn't even come in till 10.899, but that's a heck of a move back up. Not that I'm saying I don't think we're capable of seeing a nice rebound here in equities, if nothing more than some short covering. As I said, right now we're almost 10 handles off of that support level that I was looking at in the S&Ps yesterday afternoon, so we can still push higher. We'll go and stay. We're actually going to move this to 10.867 right there. And there's today's bias chart. I'll get that posted into the room. And thanks for joining us here on the European Crossover.